Tesla Model Y topped Italy EV sales in November. December 28, 2022. It was another month of bittersweet feelings for Italy's car sales in November, with the rest of Europe leading the charge in the switch to electric mobility. The continent's fourth largest auto market saw contrasting signs for EV adoption. Tesla's decisive lead in BEV sales helped lift fully electric car market share and limit year-on-year losses. The latest official statistics for Italy's car market are out and tell a story in line with that of recent months. Overall car sales are on the up. EV sales, not so much. Over 121,000 cars were registered in November, up almost 14% year-on-year, from the less than 107,000 units in November 2021. Conventional ICE powertrains were stable, with petrols at 26.9% and diesels at 18.2% market share. A year ago they reached 26.8% and 19% respectively. Plugless hybrids reached 33.6%, up from 31.3% 12 months before. Battery electric vehicles, BEV scored 5,162 registrations in November. After the disappointing results of October, this was another month of subdued sales levels, with a decline of almost 26% from the nearly 7,000 units of November 2021. It was at the same time the second highest monthly result of 2022 so far, following the peak of June when pent-up demand was finally released as new incentives were launched. Fully electrics thus reached a 4.2% market share, far from the highs of last year, 6.5% in October 2021, but also amongst the best figures of 2022. It was not, however, an organic result, as it's thanks to Tesla that BEVs avoided another monthly debacle. Something we will see in the chart below. Plug-in hybrid PHEVs powertrains followed a completely different path than fully electric cars. With 6,698 registrations, PHEVs reached 5.5% market share, with close to 18% growth from less than 5,700 units 12 months before, when they took 5.3%. The stark difference from BE versus negative result confirms the year-long trend that is seeing this bridge technology keeping the lead over its uncompromised alternative. The good performance of PHEVs allowed overall plug-in registrations to reach 9.8% market share, the second best result this year, although nowhere near the 11.8% result achieved a year before. In this month of mixed signals, the monthly top 10 BEV chart shows one clear winner in a sea of underwhelming results. With outstanding performance, Tesla Model Y eclipsed all competition by erupting to number 1 with 1,008 units, the EV's best monthly result to date, in what looks like a repeat of its recent September exploit, except that this was no quarter end. Clearly the ramping up of Berlin's Gigafactory production, along with a comparatively attractive price tag. The base version costs over €7,000 less than the base Model 3, are supporting Tesla's increasingly difficult mission in the Italian market, which bodes the question as to how many more could be sold. If only they qualified for incentives like most other BEVs, at a very wide distance. Tiny Smart 42 followed in second place with 471 units. Less than half the numbers of Model Y. Fiat 500e closed the podium with a lackluster 396 registrations, very far from its previous peaks and in line with recent months' dull performances. More compact models followed, including the once promising Dacia Spring, fifth position with 351 registrations, which keeps missing out on a high, untapped potential due to production constraints and the brand's apparent focus on other European markets. C-segment German siblings VW ID.3 and Audi Q4 e-tron also made a symbolic appearance in the lower ranks of the chart. The only models beyond Tesla Model Y to break the A and B segment's usual dominance of the Italian market. The most notable absence from the chart was that of the Tesla Model 3. A once powerful contender to monthly podiums, but currently dragged by 20% YoY price hikes that have suppressed demand. This lull might only get resolved once Tesla's factories, including Berlin, will start producing the much-touted revamped Model 3, with fewer components, and updated battery pack, paired with a more attractive price point to bring back its lost mojo. As new, higher-segment BEV models still struggle to break through the tough barriers of Italy's car market with the notable exception of Tesla Model Y. Italy's staple Mini BEVs can't manage to make a positive difference and instead contribute to a weakened sales scenario that has now consolidated over the months. The Italian market's extreme sensitivity to price means only well-executed and appropriately priced models will meet success and create sustainable long-term demand. The seeming paradox is that an upmarket D-segment SUV is showing the way. Will lower-price automakers take note? Source reposted and summarized from Stephen Loveday at Inside EVs. My take, of course, it's the best-selling EV, soon the best-selling car. Could the Tesla Model Y be the best-selling vehicle of 2023? December 28, 2022. The Tesla Model Y could be the best-selling vehicle of 2023. According to an analysis from Recurrent Auto. Recurrent Auto, an automotive market analysis and retail software company, has released a complete set of predictions for the automotive industry in 2023. Most notably, Recurrent CEO Scott Case predicts that the Tesla Model Y will be the best-selling vehicle of next year. Recurrent isn't completely unfounded in believing the Tesla Model Y could achieve amazing results in the coming year. The Model Y has achieved amazing sales stats around the world already in 2022. Most notably becoming the second most popular EV sold in China in November. If the vehicle can maintain this success going into the new year, it could be a defining moment for the American automaker. Sadly, it isn't all good news for Tesla. While Mr. Case predicts that Tesla's production numbers will continue to grow along with its sales volume, Recurrent also predicts that Tesla's market share will also dip below 40% for the first time since 2017. According to Mr. Case, this market share will likely be lost to the growing number of competitors in the market. Ford is another anticipated winner in the EV market next year. The Recurrent CEO believes that, now that the Blue Oval has witnessed the incredible demand for the electric vehicles they produce, it will continue to ramp production at an ever-increasing pace and will finally be able to meet the demand for its hot new F-150 Lightning. Further, Recurrent estimates that the F-150 Lightning will surpass the Ford Mustang Mach-E in sales next year. More generally, Recurrent anticipates that many manufacturers will benefit from rapid growth in demand for fleet orders in the coming year. While some buyers, Amazon and Hertz in particular, have already begun to place enormous orders for EVs to replace their ICE vehicle fleets, more and more companies will join them in the coming year. Along with the rapid growth of new electric vehicle sales, the Recurrent CEO anticipates growth in the used vehicle market. Specifically, he sees two things happening to used electric vehicles: demand for them will grow, and the need for battery health monitoring websites will increase. Sadly, Recurrent doesn't anticipate that used EV prices will decrease significantly. Overall, these combined factors will push the EV adoption rate ever higher in the United States. Though Mr. Case was careful not to note a specific number, but with the market becoming ever more competitive in the new year, how will automakers differentiate their products? The CEO notes two focal points: charging speed and poor weather performance, as the two weak points of electric vehicles currently. These are the two areas that the CEO sees will be the competitive ground where brands compete. Especially, as he notes, many automakers have begun to hit a ceiling regarding battery technology and the range they can provide. 2023 will likely be an exciting year for the electric vehicles space. Along with exciting new technology, it could quickly bring countless new customers and a new culture of acceptance of the technology here in America. Here's to hoping that progress is as strong as Mr. Case believes it will be. Source reposted and summarized from William Johnson at Tesla RT. My take: it's going to happen in 2023. Toyota is not going to be happy about it. Tesla stock gets support from South Korean retail investors. December 28, 2022. Retail investors in South Korea have bought $2.8 billion worth of Tesla stock despite its downward slide these last few months. According to the Korea Securities Depository, day traders bought $160 million worth of Tesla shares up through December 27, 2022. South Korean retail investors continue to buy Tesla stocks amid its downward slide. As of this writing, Tesla's stock price stands at $109.10 per share, down 11.41%. The company's market cap took a hit, now standing at $344.51 billion. Tesla stock is down 69% in 2022 and has dropped 73% compared to its record high in November 2021. Bloomberg notes that despite its downward slide, Tesla remains a popular overseas stock among South Korean retail investors. In August 2022, Tesla RT reported that Tesla fans in Korea amassed $15 billion worth of Tesla stock, amounting to 1.6% of the company. Like most Tesla bulls, South Korean retail investors are taking advantage of the current Tesla share price and buying at the dip. Tesla remains a popular brand in Asia, and Elon Musk is still a popular figure in the region. Tesla is strengthening its presence in Asia. Recently, the office of President Yoon Suk-yeol shared that Elon Musk considered building a factory in South Korea. President Yoon later stated that he would be open to offering Tesla tailored incentives if it builds a gigafactory in the country. Tesla is expected to announce the location of its new gigafactory before the year ends. The company was rumored to announce it last week, but Tesla kept mum about a new gigafactory. Mexico, Indonesia, and Canada are the other countries vying to be the location of Tesla's new gigafactory. Source reposted and summarized from Maria Morano at Tesla RT. My take: this could be a once-in-a-lifetime buying opportunity. Tesla unveils brilliant new ecosystem update. December 28, 2022. The Tesla ecosystem was recently shared via its Twitter account, and it shows a very simplistic yet brilliant diagram. You have the sun on the left. The sun is what causes everything to work. The sun gives energy to Tesla solar roof or solar panels. Those give energy to Tesla storage, which is Megapack or Powerwall. From that energy storage, you can have someone living at a home using Autobidder. This allows someone to store energy and sell it back to the grid for a profit. From that same energy storage, you also have Tesla battery cells that are used for creating the Megapack and Powerwall, and also for creating Tesla vehicles. Those Tesla vehicles are currently the Model 3, Model Y, Model S and Model X. Tesla is famous for these vehicles. These vehicles get their Tesla battery cells and also have FSD software running in them, which allows the vehicles to run autopilot and FSD, allowing the vehicle to drive itself. This is Tesla's business, simplified, and covers everything they are giving to customers right now. One future addition that will be added to this ecosystem is Tesla Bot. That's going to probably be put somewhere connecting to Tesla cells. The Tesla Bot is going to need battery cells and FSD in order to run. There'll be a name change possibly for FSD to fit both Tesla Bot and Tesla vehicles. Beyond the Tesla Bot, Tesla may also sell Dojo as a service. This is the way that Tesla trains its massive data sets, or is Tesla's attempt to make training machine learning models much more efficient. Regardless, all of this starts with the sun and the near-limitless energy that it provides. Autobidder and FSD are maximizing utilization through software. In the end, it will be AI and software that end up powering Tesla's products, not humans. Are there future additions that you would add to this diagram? Is Tesla's business model simple and brilliant? Source reposted and summarized from Jeremy Johnson at Talk News. My take: Tesla's virtual power plants are going to be huge.